Hello there, what's good and what's happening, amazing people? Welcome to the Elevation Lab. It's your host, Rick the Billionaire. Yes, I know this video is long overdue, but here we are doing it. I'm literally burning the midnight oil for you guys. It's been busy days. Currently, it's 11:42 p.m. So that shows how much committed I am for your success, and I hope you're doing the same for yourself as well. So on our previous sessions, we've discussed a lot. We got to introduce what forex really was. We also got to learn how the market moves, and even started a bit of market structure, just to give you like an overview of how the market moves and how you can be able to analyze charts even to profit from the markets. And on today's session, I would really want us to speak about market structure in a more advanced level. We'll be talking about swing points and substructures, and if time really allows me, then I'll also get to talk about how to identify strong areas of support and resistance. Again, I really don't want to make these videos very long, so let's get into it. Let's see what we can do. So in our previous session, as I had said, we talked about how the market moves, and we said during an uptrend, we do see a market forming higher lows and higher highs, higher lows and higher highs. And this simply means this is a bias market because it's a market that's on an uptrend. And anytime that we get to maybe have a shift like this, where we take out this structural point, the previous higher low, and have price give us a low which is lower than this. Now we get to refer to this as a lower low. Then if price doesn't go above this area, now this automatically becomes a lower high, then lower low, lower high, lower low. And this is the structure of a downtrend market, and basically this is a seller's market. So in today's video, I want to speak about structure. So you'll notice, of course, I would want to speak about structure in a detailed way. So we said swing points. Swing points, these are more like how I would really define swing points. I would want to define swing points as protective highs and protective lows. These are like the key structural levels. And when you're looking at market structure, these are the areas that you should be looking at to be able to properly identify break of structures and avoid getting manipulated in this market. So let me give some light. So for instance, you find the market will push from a low point to a high point. Yeah. Now this right here, it's what we refer to as a swing, because you've moved from this swing low to a swing high point. Yeah. Then again, the market moves again to give us this swing. Yeah. So anytime we want to look at our swing points at this particular time, we would want to say this right here and this right here were acting as the swing points. This was the protective low, this was the protective high. This simply means in case price would have moved this way, could have said the price has formed a lower low because you've gone past this. And if price gets to move past this, now we say price has broken our swing point or structural area. Again, if you come to this other push, this impulse move, this right here, from this point to this point is the swing point. So in these markets, based on my own observations and learning from being on the charts and of course progressive learning, I got to understand that a lot of times we'll find that institutions tend to, the market moves in a way that that's not as perfect as shown in the diagram, and that's when you find that we have like formation of substructures, and substructures will always be there just to make sure people are getting like manipulated or confused by the direction in which the market is moving. So at times you find the market is moving a lot like this. We've moved, let's say, from a low point to a high point, then you see price again maybe pull back, then instead of creating a higher high, the price again pushes down, pushes there, gives us a low high, then price will push to give us another low, then push. So basically what you guys understand, the first thing and the most important thing I always look at when I'm looking at structure is the swing points. And for this case, we know this right there is the swing point, and this right there is the swing point. So this simply means now, so long as our market is within this range, yeah, within this range, this simply means we do not have a break of structure. And you'll find a lot of people when they see this such stuff has happened, they'll say, oh, the market has formed a higher low, then a lower high, then they'll come right here very quickly. They'll quickly come here. We've broken structure, now we should be starting, or rather we should start looking for sell positions. My machine is lagging, come on. I'm trying to be patient with that. But again, yeah, this is what I really want to show you guys, how to properly identify structure using swing points, yeah, so that you may be able to now say this right here is not a structural point, this is a substructure, and knowing that, now you'll know how to move accordingly. So you'll find these people okay, and these people, somebody will come say, you know what, prices pushed past our higher low, we've broken structure, and now someone comes and starts selling here, because now they already have their sell limits here, and they will definitely get activated. That the market try to react in their direction, and these people are now comfortable. We are about to melt down, and to their surprise, we get like whoop. This right here is what I really want to speak about. Again, the same thing will always happen even for a market that's on a downtrend. You'll find a scenario where the price will push. Let's say, okay, let me draw like a fresh diagram. You'll find a scenario where the market will push down. Then, of course, the market again might give us like a nice pullback, then a higher low, then a nice push that tends to tell people that you've broken structure. Then price doesn't go past the swing point, and boom, change, or rather a continuation in trend right there. These are the swing points. So anytime that you are identifying structure, it's really important for you to begin by identifying the swing points, because once you identify the swing points, now you already know where to be looking for, to be able now to say we've properly broken structure. We've broken structure, we are no longer in an uptrend market, we are going towards this direction, and that's by identifying swing points. And swing points will always help you know first the ranges, because basically a swing point is the range in which the market is moving at that particular time, yeah. And the other thing, the swing point will also help you to properly identify structure, a break of structure, and how the price is moving at that current particular time. So let's look at real-time charts. Let's see if we can be able to identify what I'm saying, and yes, let's see how it goes. So we look at this large swing here. let's identify structure on this large swing here. So again, remember what we're going to do. We will be looking at the swing points. So I'll begin by an example from the left, where we can see this right here, this right here, this right here was our structural point. Let me use this week. Let me use this week. This week here was our structural point. Why? Because you can see we had this lower high, then equal lows, then lower high, then price from here pushed all the way down to give us a lower low, and then price pushed up to give us a lower high, but price never went past this zone. Why am I marking these areas is the protective highs, or rather is the swing points? Because potentially the price could do like this, could have this equal lows, then price push to this area here, then continue with the move again. That would still be appropriate, but if you leave it at this, you'll find that sometime price will break this. Of course, maybe you are trading a double bottom, you've already seen a double bottom, and now you're saying, oh, you know what, my price has broken the neckline, and probably you're looking for more short more buys. Then the price taps into this zone and comes down again. That could potentially happen, but you're seeing a scenario where that did not happen. So what really happened is this right here, this right here, on this 4-hour time frame, this right here was our protective high, and this right here was our protective low. Why? Because price never went, as in we never saw. For me to qualify a break of structure or even a continuation, would want to see like at least 2 candles or more close below this previous, so that we can now say we have a lower low. But again, you can see this is more like our price is on the same level. So this simply means this is our swing point, and this right here, this is our swing high, this is our swing low, and right here in between is what now we refer to as our range. So if price goes below this, I will say we have a lower low, and if price comes all the way past this area, now we completely now be able to say truly we have a higher high, and we can look for long-term buy positions. Why? Because now we've taken our swing points out, and we can look for buys comfortably higher. So you guys are able to see price formed higher low. Of course, you can see price forming higher lows and higher highs, higher lows and higher highs. Again, look at this. You can see a formation of lower high. Let's shift our focus here. This right here is the swing point. Hope you guys are getting something. Hope you guys are tagging along. We can see price pushed up, but at this particular time, price never went past this zone here. Why? Because this zone here was our current. Once price pushed from this area to this area, now this was plain as the swing point. This right, this was the swing point, this was the swing low, this was the swing, or rather this was the higher low, and this was the higher high. So we are seeing a scenario where price pushed up, price did not take out our previous higher high, price created equal tops, then pushed down to give us higher low, then again now price pushed up, yeah, to create what we call a higher high, because you can see price now closed above this area. But look at what happened here. You can see price pushed down, yeah, price took out this. So now somebody has already seen this, and they're saying, oh, you know what, we've broken structure, we've currently broken structure on this Aussie dollar, and I'm looking for short positions on this area, which is, yes, this is a supply area, I'm looking to short from this area. then they have their sell limits there, and look what happens. These people get wicked out. Why? Sorry about that. If you are not able to properly identify structure. So if you really want to identify the swing point, the question that you should be asking yourself is, where did the move start from? Where did the move begin? And this is it. Look at this. This is where the move began from. Then we pushed to this point where we never had a higher low. Then again pushed to give us a move began from this point. And consider our swing for this push there. This areas our strategy maintained. We are in this, yeah, like this, then closed below the. Now we could potentially say we have broken structure and it's time to start looking for sell position. You can see what happened. Price kept on pushing up because now we have what we call structure. And now that's exact I was trying to show you guys. Of course, we'll keep on seeing this happening over and over. You can see another scenario here again. It did not form a higher high frame, which is different than price pushed up in this scenario where we have low highs and higher lows. So from this higher low, again get another higher high. Then look at this, same thing happening. If you're not keen in identifying structure, you'll end up getting manipulated every time. Look at this. You have a scenario where price pushed from this point, which was acting all the way up, yeah, to this point there. The price created a higher high, yeah? And price created pushed somewhere, so this said we've broken short positions, and after they took the short position, they ended up getting wicked out. Why? Because the market kept on going up, because we had none. I'm really hoping this did not completely destroy you had an internet issue. As I was saying, you can see another scenario where price was higher low to give us a higher high. Why? Because we closed above the previous high, and you have a scenario where price pushed down, and people now started seeing what they may have referred to as a breakout structure. And once they saw this breakout structure, of course, they were ready with their sell limits here. Then they got hooped out, or rather taken out. Why? Because the market respected the range. You might not take out these swing points. Yeah, it's really important when identifying structure for you to be able to properly identify the swing points, because they act as the highs and the protective lows. And once you're able to identify the swing points, now it's easier for you to be able to properly identify structure. Let's keep on looking at this. We'll even go to much lower time frames, and I'm sure some almost look at this scenario where we have already broken structure, lower high, then to a lower low point, again lower high. Then from here we just have like minor consolidations here and a lower low. Yeah. Then we have scenario where price at first price looks like it has taken out these structures, this right here, which looks like structural points, but price yeah. So probably somebody maybe could have said, oh, we've broken the neckline and start buying right away. Yeah, they should have waited for price to come back to this demand level, then take their nice buys. Again, after price took out this high here, this is when we can say we had like a break of structure. And again, price came back and broke structure again and continued with the downside movement. Look at this. Look at this scenario. We have, these are what we call substructures. Substructures will always be present. Substructures will always be present in a structure. You can see price pushed all the way down, took out this low, and again these other lows, these two minor lows. Then price pushed up. Remember at this particular time, now these areas, get rid of these drawings. I don't know why my machine keeps on lagging. Anytime I'm recording these sessions, it doesn't want you guys to prosper. Okay, let's see. Probably it's trading. I don't know. Who should I blame? The machine or trading? Hope you guys are really getting the point that I'm trying to drive home. Yeah. Hope you guys are really getting the point that I'm trying to drive home. It's really, really important for you to be able to identify swing points and substructures, because once you are able to identify swing points, now it gets easier for you. It gets easier for you because yes, at times you might have to wait for long, or even if not waiting, if you're already in a position, then you know where to look. You know where to look. Yeah. I don't know what's happening. I really don't know what's happening. I really don't know what's happening. Because I can see the network is still intact. Okay, let's see if we can get this going. I believe I'll just do like thing can get to do like how to identify major support and resistance zones as a whole different video on its own because of time. Yeah. So look at this. We have this scenario that I was showing you guys where we have an instance where the market pushed. Was this really it? Yeah, this was it. We had this scenario where price pushed all the way down, took out these lows, the first low, the other low, and all these lows to create a lower low, because you guys can clearly see price created a lower low. So this simply means this right here, the first thing is being able to identify a swing point. This right here was our protective high, and this right here was our protective low. What do I mean by protective high and protective low? These are like the particular time. So if price direction or a continuation in the same direction, if we break to the downside, this simplifies a continuation in the trend. If we break to the upside, that again signifies a change in direction of the trend. Yeah. So that's why I'm calling them swing points or protective highs and protective lows. So you can see this scenario where we have our nice, come on. Oh, it's you can wait for it. Pages and yes, okay. You have this scenario where price created a minor structure. You can see this is like a higher low, of course, and this is a higher high. Then push to the downside. We still remember, yes, at this particular point we have a lower low, but we have not gone past this low, and this right here is our protective low. So price could potentially come here and still get respected and pushed to the upside. So long as we stay above this area, you can never say the price will continue to the downside until price now breaks. I hope you guys are getting the point that I'm trying to insinuate. Protective highs will help you identify where the price is ranging at, or trend, or when